Good afternoon, everyone, and welcome to our June 2025 SuperMate update. By way of introduction, I'm a bit of a new face here. My name is Eugene Skiepers, and I'm the Business Development Manager for SuperMate at SuperConcepts. It's particularly exciting for me today because this is the first time I've got to host this webinar. And I'm still kind of getting my head around some of the tech and everything like that. So I promised to try not to break anything like I did yesterday during the practicing. But just bear with me if that happens. Just a big thanks to Peter Emilio, who you are all familiar with from hosting this in the past. Big thanks to Peter for hosting these and doing such a great job. Joining me as usual for this webinar today is Reese Hopper, our Product Design Manager. And we do have a special guest who's probably no stranger to this webinar as well. Craig Stone, who is our General Manager for Quality and Technical Services, is going to be talking about updates in the SMSF industry. So it should be quite a good webinar that we're running today. Thank you again for joining all of us. And just by way of an agenda, we are going to be getting an SMSF industry update from Craig. Then Reese is going to run us through a demo of SuperMate, focusing specifically on the 2025 June releases and any key improvements that have happened. We'll talk about some compliance releases, some updates around FY 2025 and reporting changes. And there'll also be, and this is quite a mouthful, legacy pensions commutation changes. I've been trying to practice that all morning, and I didn't manage to get it right. So there we go. Anyway. So without further ado, I'm going to pass on to Craig. Craig's going to give us a quick compliance update for June, which is also going to kind of help to set the background for the SuperMate update that Reese is going to give us. So Craig, over to you.
Very good. Thank you, Eugene. Appreciate that. One of my favourite South Africans. So good to see you again today. Looking forward to running through a few things for a couple of minutes. I know Reese has got a lot of information to go through with the changes to SuperMate for this next big release. So I won't take up too much time, but some of the concepts that I'm going to run through probably aren't new to most attendees, but they'll give a good background as to what Reese is talking about in the compliance space around SuperMate software. So a couple of topics here today, NALE and NALI, legacy pensions, as Eugene's just mentioned, and then also just a really quick mention about Division 296. We're covering that off recently in a bit of webinar and blog action, so LinkedIn. So hopefully everyone's not getting too sick of that at this stage. So really quickly, we'll go through these topics and then hand over to Reese to run through. So just bring it all up at the moment. NALE, non-arm's length expenses, non-arm's length income. The legislation was put forward because there was seen to be non-arm's length dealings with SMSFs, and the main idea was people trying to get around the contribution cap that's been brought into play with concessional contributions and non-concessionals. So if you can not pay the required rate of expenses or increase the amount of income coming into the fund, then you typically, the idea was to avoid the contribution cap issues. But the legislation's come through and it's gradually settling that now that there is a non-arm's length expense issue or non-arm's length income issue, then the tax will be payable under the NALI section of the annual return and taxed at 45%. So the tax arbitrage that you think you're getting, you'll get caught with this new legislation. So a couple of different types of non-arm's length expenses where an expense shortfall is calculated. So if there is an expense of the fund and it's not at arm's length or market value, then there's two different types. If it's a specific expenditure or a general expenditure, different outcomes. So if it's the easiest one probably is a general expenditure. If it's linked to all of the income generation of the fund, then that's going to be considered a general expenditure. It's not particular to an asset. If it is, then that's called a specific expenditure. And then within that, there's two different types, if it's on revenue account or on capital account. So revenue account, if you're dealing with an expense that's generic around that whole asset, then, and it's ongoing, then that's going to be considered the specific expenditure on revenue account. If it's on capital account, where you're improving the value of an asset, then that will be considered gnarly as well. But there's more implications around the capital account, because not just does the income in that particular year get counted as gnarly, it's that year as well as ongoing, and any capital gains that come about as well. So just watch out for that. That's very important. But where we'll get to the practical side of it is where Reece can show us how that's included in the annual return itself. What's the tax implications around the calculation of this non-arm's length expenditure? If there is a shortfall, then, as I said before, if it's on revenue account with a specific expenditure, then it's just that particular year. The income from that asset will then be gnarly. If it's on capital account, in other words, it's what the technical words are, is tainting that asset, then income in that year will be gnarly, as well as ongoing income, as well as any future capital gains. So we've got to try and avoid that at all costs, and just make sure you pay the market rate of those expenses. If the expenditure is related to general expenditure, then the gnarly amount will be twice the shortfall amount and then taxed at 45%. So if you're paying a certain amount and that's $100 under the market rate, then you're going to be taxed at 45% on 2 times that $100. So just wanted to give that background before Reece gets into that. The other topic that we wanted to cover off is the legacy pensions, which everyone's been hearing about for the last 6 or 7 months. We did go through this in a bit of detail last session and the session before, but basically what we're just reiterating is that all of these legacy pensions, these old style market linked pensions or complying pensions, are now able to be commuted back to accumulation to free up the trustees to make decisions around the assets that are there. So we're encouraging members of super funds and their advisors, accountants, to check the trustee to make sure that you're allowed to do this. Make sure your minimum pension is paid for the 25 financial year. And if you stop the pension partway through, it's only that pro rata amount. Whether or not you then just keep the value of those assets in accumulation or actually commence a new pension will be dependent upon the space in the transfer balance account for that particular member. And also just the final one is watch out for death benefit or reversionary pensions, because yes, you can cease these legacy pensions, but if it's a death benefit, then it must be paid out as a lump sum or commence a new accumulation, a new account-based pension in the form of a death benefit pension. So just be aware of that. Had a few questions coming through lately. And then my simplest Division 296 slide that I've ever put together is watch this space. There is no legislation. If you're interested, we have run a webinar last week. If you would like a copy of that, please reach out. So I'll hand back to you, Eugene, and hopefully we'll be able to get some good information through SuperMate with Reece. Thank you.
Excellent. Thank you, Craig. Just confirming you can, yes, you should be able to see the agenda back on there now as well. Thanks, Craig. That was a good update. And wonderfully sets the scene for Reece's demo. So Reece, over to you.
Thanks, Eugene. I'll just share my screen now. Yeah, so today I'll be knocking off the SuperMate demo where I'll be covering the June 25 release. A big portion of that will be the compliance release, but we have snuck in some non-compliance items into this release. So the release that we are going to do on the weekend will total almost 150 new items. And today I'll just cover off the compliance stuff, and I will also sneak in some three items that I think are really important, really exciting, that relate to non-compliance items. So the first one is the previous administrator relationship. We've introduced a new relationship type. So in the fund details section, if I jump into the relationships section, this is where all the different relationships to the fund are maintained. You can see here we have some external relationship or internal relationship types, auditors, who the administrator is, a few internal relationship types, who's the customer service manager, who's the end of year administrator, fund accountant. We've introduced this new one, previous administrator. And where previous administrator can be used is obviously if you have a, if you're taking over a fund from another firm, this you can add this relationship to signify where the fund came from. So in the future, you'll know that the previous administrator was this. If you ever need to get more information from the previous administrator, you can always look at the relationships tab to see who it is. The other benefit for adding the previous administrator is when you are taking over administration of the fund, if you jump into the letter token, I'll navigate to letter tokens. We have introduced about 15 letter tokens that relate to the previous administrator, and that will enable you to set up a ethical letter to send to the previous administrator. Generate the letter now, and it basically just grabs all the information about the previous administrator that were in those letter tokens. So I'll just wait for the letter to load. Yep, perfect. And you can see I've generated the ethical letter and the previous administrator's details, where the letter's being addressed to, the salutation, and I've just generated the ethical letter. I don't have to have a letter template sitting outside the system where I'm entering in details. It all just gets generated automatically. That was the previous administrator relationship. The next two items I'm going to cover off together, and it's automatically adding documents to report suites outside period closes and documents generated by workflows are going to be automatically indexed. And where this helps is if you have a report suite, the one I'm going to be showing off is the ASIC, annual review report suite, where I have a letter template set up that will generate based on the data on the fund. And then I also wanted to grab an annual review, which I've downloaded. It's already uploaded to SuperMate. And then during the process, I'll use a workflow to generate the report suite, and then the document that gets generated from that workflow is automatically indexed. So navigating back to SuperMate, using the same fund, go to the workflow screen. You can see in the workflow screen, I have this ASIC annual review and solvency resolution workflow. I can view the document. So if a workflow has a document attached to it, you can see a little document symbol. I can see the company statement, which relates to that workflow. Company statement and the invoice. I can also view that document if I jump into the document screen. Here's the annual review. I can view the document. I can also see, since this document is attached to a workflow that is incomplete, you have an indicator here to say, hey, if you've got this document here, there's probably work that's relating to this document because you have an incomplete workflow. With the actions, I can also view the workflow, see where the workflow is up to. and recommence the workflow. Now I am going to work off this workflow just to show how report suites do grab documents that are already indexed into the system and stitch it into the report suite. This step is basically making sure I have the ASIC agent in the relationships tab, which I do. I've used the take me to the screen on the workflow section so I can go check. When I select complete, it should not have done that one. I'll just kick off a new workflow. Be playing around with that workflow, so maybe that's why it didn't work that time. But when I select complete on that step, it'll automatically generate the ASIC minute and report suite. If I go to my works now, my jobs, the report suite has been generated automatically for me from that workflow. I can view the attachments. And this is the document that was produced by the workflow. You can see here I've got the letter. It's grabbed all the details from SuperMate. It's populated the minute, and it's also grabbed the company's statement from the document screen, attach it to the report suite. Now, if I was to finish off this workflow, whoops, shouldn't have select complete on that one. Yeah, so if I finish off the workflow, it'll take me to the query screen where I can raise a query. Just select raise query. I'll grab the ASIC annual review template, which has which pre-fills the template based on query tokens. So obviously letter tokens can be used in queries. I think I showed that in the last webinar. I can attach the document which I just produced to the query, and I can send that query. And now that I've created the query, while I have the workflow open, you can see that the query here has the workflow link to it. So the purpose of this webinar and what I was just showing off was just the ability of being able to generate report suites outside the period close that will grab documents from the DMS and producing the report suite during a workflow will store that document in the document section. But I thought I'd just take the opportunity to plug how the workflows, documents, queries, they're all interlinked. All right. So now back to the PowerPoint. Compliance. The items I'm going to cover that we're releasing this weekend related to compliance is the 2026 rates thresholds, 2025 tax return schedules, the trust income schedule calculation updates. This one here, we actually, it's been in the system for a while, but I thought since I'm doing a compliance update, I might as well show it off. We have the ATO general interest charge deductibility, NALI, and the legacy pension commutations. So 2026 rates to the thresholds. Craig would have covered this in the last webinar. This is what we're implementing this weekend for 1st of July 2025, where these 4 rates and thresholds have increased. So that'll apply in SuperMate. While the the contribution caps haven't changed with the increase to the general transfer balance cap. The bring forward rule thresholds have changed. So for the 2026 financial year, you can see the new the new impact, the impact to the bring forward rule thresholds and the TSB balances. So you can see there's a bit of a difference there. Tax returns and schedules that we've released. Obviously, so you can lodge funds. We've brought out the SMSF annual return, capital gains, losses schedule, trust income schedule. We've also released the fund income tax return for our SAF clients and the 2026 activity statement. So you'll be able to lodge your BASs and ISs through SuperMate. Trust income schedule. One of the changes we made during the year was the trust income schedule. Generally, how the annual returns work is that if the field does not enable cents, we truncate the value. I.e., if it's $4.50, we just cut off the cents. It'd be $4. And we found that there was an issue being raised by clients that were saying, hey, I'm getting this validation saying that B, U, or H wouldn't be zero because there was foreign income tax or franking credits. And the AHO were able to tell that there was foreign income, even though it was less than $1. So what we did is that if H, U, or B had a value in it, but it was less than $1, we would just put $1 in the screen. You can see here, foreign income tax offset is 30 cents. I think for the income, it was 40 cents or something. So that would have added up to 70 cents in H. Prior to that change, it would have been 0. Now we just put 1 in. Similar to U, the franking credit, 0.21. I think the franked revenue portion was 50 cents. So that once again added up to about 70 cents. We've rounded that up to $1. ATO general interest charge deductibility from 1st of July, the legislation has changed that general interest charges are no longer tax deductible. What that means for you guys, it doesn't actually mean anything. There's not going to be any changes. Still use the same account. Still use you don't have to change accounts. You don't have to change any chart settings for when a fund is moving from 25 to 26 financial year. Process the transactions as normal. We've put a control into the background to say if this transaction is dated prior to 1st of July 25, it's 100% deductible. If this transaction is dated after 1st of July 25, it's 0% deductible. So once again, you don't have to worry about changing accounts, using different accounts for different financial years, or deleting transactions and reprocessing them. Just continue on as normal. I just thought I'd bring it to your attention if you are doing some 26 financial year work and all of a sudden you're wondering why general interest charge was not being wasn't being calculated as tax deductible. It works both ways, whether you are processing the general interest charge using the ATO income tax screen or just processing directly to the account. It doesn't matter. It's been processed. The next item, Craig spoke about Gnarly. For the SuperMate part, it's quite simple. or once you've calculated how much the NALI should be, it's entered into the financial year screen, and when you do the period close, you'll be able to see the figure on reports. The system grabs the value out of the financial year screen, financial year information screen, and it uses it in the tax calculation. Okay. I'm just going to navigate you to SuperMate just so I can show you where it is. Before I show you where it is, one of the things I did want to show, I've shown it off in the past with previous webinars, but I think it's worth showing again because sometimes when I'm talking to clients, I've noticed that they are still using SuperMate in the browser. What I mean by this is you can see I've got it open in Chrome. If I go to the three dots, come down to Cast, Save, and Share, there's an option to install SuperMate. Once SuperMate is installed, it's got the added benefit of the top web URL bar and all the documents and web links at the top no longer appear, so you do get a lot more real estate. However, one of the main reasons that I use it is because because on the taskbar, SuperMate will appear. Just bring up my taskbar. Oops. Sorry. All right. So the taskbar is not showing because I've got the PowerPoint running. But on the taskbar, SuperMate does show as a separate icon. It just makes it easier to navigate back to SuperMate. So yeah, once again, I highly recommend installing SuperMate. So it's and not accessing it from the browser options. All right, NALI. I've opened up the Legacy Super Fund. If I navigate to the financial year information screen, you can see here that NALI, we've added NALI due to NALI. To the screen, if I select Edit, I can modify the figure. I'm just going to save it as $10,000. Once it's in, I can navigate to the end of year screen, run a period close. I've already run one, so I'll just select View Report, which will bring up the financials that were created. And I'll be able to show you the different reports that we've added it to. So you can see here, we've added a note down the bottom on the tax reconciliation report to say that the non-arm's length income includes $10,000 due to non-arm's length general expenses. That's where that $4,500 comes from. On the notes of the tax rec in the deduction section, we have the 10 grand to say, because the notes to tax reconciliation, the deductions, it generally only includes transactions or deductions that relate to transactions. So it's good to call out that in addition to the above, there's going to be 10 grand relating to NALI. On the notes of the tax rec, where we show off the exempt pension income to calculations, we've added 10,000 to the calculation. And also statement of taxable income, where the gnarly is. We have the 10,000. Well, we have the notification too, just so people are wondering where that figure comes from. It's quite easy to identify. And lastly, the legacy pension changes. We've created 2 new screens for commuting market-linked pension and lifetime compliant pensions. You can see here that depending on whether it's a lifetime compliant pension or a market-linked pension, we have different options available, and that's mainly so we can calculate what the T-bar record should be that needs to be reported, but also the commutation value. With the lifetime compliant pension, you can see that we have a field here for commutation amount from the reserve balance. And as you're probably aware, with SuperMate, we record lifetime compliant pensions correctly where we have the reserve the balance that supports the lifetime compliant pension sits in the reserve balance. And so as part of the legislation changes that did occur, you had the option of going, do I want to take the full amount out of reserve, or do I want to take a less amount? So that commutation amount field will allow you to take less than what is in the reserve balance. But it also helps with processing commutations to lifetime compliant pensions where there are 2 lifetime compliant pensions within a fund. So say you have $1 million in reserve, you have 2 lifetime compliant pensions for 2 different members. Once you get the actuarial certificate to inform you what the split is between the 2 lifetime compliant pensions, you can use the information from the actuary to enter into this field, commute both pensions if you want to. Market-linked pension, I'll dive deeper into the calculation when I'm showing off SuperMate, but we've included the transfer balance account credit at 1st of July 2017, pension payments up until the previous financial year, the pension payments for the current financial year, and the pro rata minimum pensions based on when you are commuting the pension. And all those fields will be required for calculating what the T-bar debit is going to be. By making these changes to these screens, we've also allowed the automatic generation of those T-bar records and the updating of the SMSF annual return to be automatically updated to reflect what has occurred within the fund. I probably mentioned it, but one of the main drivers for adding some of these fields was to cater for pensions that were not in SuperMate from 1st of July 2017. Obviously, any fund that is in SuperMate from 1st of July 2017, we would have the original credit T-bar record. For market-linked pensions, we would know how the value of the pension payments from 1st of July 2017 to the previous financial year, and how much was processed this current financial year. However, if the fund is new to SuperMate, so say if you're a new client to SuperMate, or you've taken over a fund from a previous accountant, and those pension payments weren't processed in SuperMate, then you can use these fields to say, okay, well, I know that this is the amount of pension payments that were processed during that period, I can just enter in here and the T-bar record will generate correctly. Okay, let me navigate to SuperMate. If I go to the members pension screen, obviously this is where the members pension details are going to be. This is where you can commence a pension. If I select the market linked pension, I can see more details about the pension. If I scroll down here, you can see this pension existed on SuperMate since the 2016 financial year. And it shows all the different pension payments that were made to date. When I select the convert button back to accumulation, I get the new screen. And you can see here, effective date 24th of June, pro rata minimum 247,000. And Craig, feel free to jump in here if I mess up what the calculation is going to be. But how the market linked pension calculation is going to be for the T-bar record is going to be this transfer balance account credit from 1st of July 17 minus the pension payments that were made from 1st of July 17 to date, less the greater of the current pension payments or the pro rata. And you can see here the pro rata one, if I was commuting at 24th of June, is higher, so it would be this T-bar record 934 and the pro rata minimum. Whereas if I change it to commuting the pension at end of December 24, the pro rata minimum is now less than the pension payments for the current financial year. So the T-bar record would be calculated as the transfer balance account credit at 1st July 17, less the pension payments for the prior year, less what I've paid to date. I should point out that this calculation is only if I'm doing a full commutation. If I am doing a partial commutation, the T-bar record will be calculated slightly different. So if I just do a $5,000 commutation from this market-linked pension, the T-bar record will be calculated as the lesser of the calculation that was under what it would be if it was a full commutation or what I'm actually commuting. So you can see here I'm commuting 5,000. This 5,000 would obviously be less than 3.2 million minus just over 1.1 mil. So if I was doing a partial commutation of 5,000, the T-bar record would be 5,000. Just going to close that screen quickly and reopen it and perform a full commutation as market-linked pension. So I'm going to commute it once again, 31st of December, commute it back to accumulation. You see that now the pension is closed. I navigate back to the pension screen. I can see that the pension's closed. Go to the transfer balance account screen. And I can see the market-linked pension debit transaction is there to be lodged. The lodgement status pending. I can just navigate to the not rollover SuperStream screen. No, it's not SuperStream, it's compliance. What am I talking about? Yeah, so if I navigate to the T-bar creation screen, this is where I can find the commutation. It's obviously overdue because this one's set up for monthly T-bar reporting. Oh, sorry, quarterly T-bar reporting. So it was due 28th of January, and I can generate the TBAR file to be loaded up into the ATO. Thank you for your time. This concludes the SuperMate portion of the demo. Just a reminder, this weekend we are doing a compliance release to cover the items I just showed, the rates changes, the lodging ability, gnarly, legacy pension. And we are also releasing the previous administrator record letter tokens and the ability to generate report suites that contain documents already stored in the system. So I'll hand it back over to Eugene now.
Excellent. Thank you, Reese. That was, every time I see SuperMate demoed, I'm just kind of constantly blown away by the level of thought and detail that has gone into all of the workflows and the bits and pieces. There's so much depth to it. It's really quite an amazing product. So thank you for taking us through that. So as I mentioned previously, we are going to be running a couple of polls. So we have our second poll coming up now. So I'll just bring that up onto the screen. And our poll question is, as the new financial year begins, what is the biggest factor that determines when you start to work on an SMSF? So we'll bring up the poll. Is it A, when the client provides documentation? Is it B, the type of assets held? Example, property, listed crypto. Is it C, the fund structure? Example, pensions versus accumulation. Is it D, expected tax outcomes? Or is it E, a mix of the above? I feel like it's a who wants to be a millionaire kind of question. I guess it is in some way when you're talking about SMFs and SMSFs, etc. So please tell us what you think, and we will check as the results come in. So far, looking like a bit of a mix. Well, as a mix of the above seems to be the response, well over 50% there. I'll give it another couple of seconds before we complete that. Yeah, that looks like it's done. So it looks like it's a bit of a mix of the above. That's very interesting. Cool. Thank you for that. Brilliant. Okay, so just wanted to remind you that within SuperMate that we have a really excellent help portal, and you can access that help portal by going to the top right of the screen and clicking the little question mark icon. That'll bring it down this drop down, which you just click on the help portal, and that'll take you through to that help portal. You'll be able to find you can explore all of SuperMate's capabilities. You can see all of the features that we have. As you've seen, there's just so many features that we have. There's a lot that the system does and can help automate for you. And you can find answers quickly and independently to all of your questions there. So feel free to take advantage of that. Now, if you're not already using the new SuperMate, perhaps you're on the classic version, or perhaps you're not using SuperMate at all, you would obviously no doubt have looked at everything that we've looked at today, and that's kind of blown your mind a little bit. Understandable. We understand that completely. It's a very comprehensive tool, but it doesn't cost nearly what you think it does. The base subscription starts at $11 per fund plus GST, and that gives you access to the Macquarie Cash, all of the items that you see here. I just want to highlight specifically things like the Data Hero, which allows you to just drag in a PDF of a bank statement, and using our AI technology will just automatically within seconds extract the transactions. We have a really great property worksheets, and it just for an additional $4.75 per month, we can actually get a list of over 200 initial more data feeds and over 200 feeds from banks and financial services institutions. So it's really an inexpensive way to get into a wealth of features and efficiency that you can get from that. So not only that, in addition, once you subscribe to SuperMate, you become part of the Super Concepts family. And as such, you have access to our education services. We run by Craig, as you would have seen in previous webinars as well. So, Right, excellent. So that brings us pretty much to the end of the presentation. We are going to have a Q&A. We'll just check if there have been any Q&A questions. If you haven't added anything, feel free. We'll give it a couple of seconds. If you do have any additional questions, just feel free to pop them into the Q&A.
There was a couple of questions thrown into the chat, Eugene, which I can address.
Yep, go for it. Yeah.
One of them was that there was a question that said, are these changes available to SuperMate Classic? And I assume, based on when the question was asked, it was relating to the compliance changes. All the rates and thresholds, the tax returns, the trust income schedule, and the ATO general interest change deductibility, all those items will apply to Classic. So you'll still be able to use Classic and lodge through Classic. With Gnarly, we made the decision to introduce just a web only. We don't predict that there will be many funds that require that. So we just updated it into web. If you are a Classic client, it's you can still navigate to the online version of SuperMate, enter in the Gnarly, go back to Classic if that's what you want to do. But we obviously highly recommend you go to web. And all the legacy pension commutation screen changes, that's all going to be in web too.
Excellent. Thanks for that. So I think the response that I gave was probably a little bit too narrow. I've just said that the changes aren't available. So thanks for clearing that up, Reese. Appreciate it.
That's right.
All right. Given that there's no other questions, I think we'll wrap it up for today. A big thanks to Craig and to Reese for your detailed presentations. Really appreciate it. Again, if you do have any questions for myself, you can contact me on my mobile number 0434 214 280 or at eugene.skippers@superconcepts.com.au. I really enjoyed hosting the webinar today. It's a good first, I think. And thank you all for joining us, and we'll see you at our next one in a month's time. Thank you. Goodbye.
Thanks, Eugene.
Thanks, everyone. See ya.
See ya.